to the Montgomery Small Caps CEO series. Today, we are lucky enough to have a regular guest back with us, Paul House, who's the CEO of mining technology company IMDEX, stock ticker IMD. Paul, good to see you and appreciate you making the time to chat today.
Thanks, Dom. Always good to catch up.
So lots of topics to cover today, Paul. Why don't we start with your recent first quarter F23 result? Might ask you to dance through a few of the highlights of the quarter, which showed much stronger revenue growth than the market was expecting, despite all the macro doom and gloom out there.
Right, well, there is a fair bit of uncertainty out there, but as we've long said, we think the underlying fundamentals for our industry have been strong. And the first quarter certainly showed that, and we saw strong growth through July, August, and September, respectively. A continued trend of strong demand in North America and Australia, but interestingly, we saw a strong influx of investment into the African region. And so the way we look at our business across all of our metrics, the portfolio of growth across our products, Hub IQ adoption and the like, we saw a good uptick in tools on hire, the way our software products are being used effectively, and good, strong long-term demand across all of those regions.
Paul, there are some market concerns around a potential downturn in exploration spend over calendar year 2023, based on softer capital raisings amongst the junior gold miners, and noting S&P's recent predictions of double-digit declines in exploration spend over 2023 before recovering again in 2024. Interested in your view on this outlook, and perhaps you could remind us of your exposure to the junior gold explorers, plus commodity mix. While gold has been challenging, the green metals activity has been very strong.
Yeah, I'd be delighted to. Look, there is always more volatility in the junior sector than in the broader marketplace. From IMDEX's perspective, we are less exposed to juniors than the total amount of exploration spend that takes place. So we are watchful of what happens in the junior area, because it is a good pulse check of what is really going on at the edge of our industry. And whilst we've seen some projects around the world pause or slow down while they look to raise cash, we are, however, seeing strong ongoing demand in all regions around the world, as we outlined in our first quarter result. A lot of the narratives that we have with our major resource companies speaks to continuing to find ways to complete drilling programs that they'd planned last year, making those commitments for next year. Most drilling companies have forward order books that are 9 to 10 months clear to them, and historically that would only be 3 or 4 months. And so whilst there may be some pressure on juniors, the majority of them still remain well-funded. They can raise some monies, albeit it is a little harder at the moment, and that's probably more a reflection of the broader risk-off in the market than it is about the underlying industry fundamentals, which do remain positive. There is another dynamic playing out, and that is that as some of the junior resource companies slow down their rig utilization, the major companies are looking to step in. And so it's a little bit like switching gears. As you move from second into third, you've got to take your foot off the accelerator a little bit. And I think that's what S&P is referring to when they look to that slight shift in activity in FY23, at the end of FY23, calendar year 24. Okay,
and so in your result, you also touched on supply chain pressures easing. Can you help us understand, what you're seeing there and what that means for your working capital and cash flow positions?
Sure. Well, it's no secret that the time taken to ship products and to get the raw materials required to construct products has lengthened during COVID. We saw a growth in our net working capital in FY22, and what we called out at the end of FY22 is that those supply chain pressures had eased. IMDEX is well secure in its ability to secure raw materials, and we're certainly seeing that inventory levels that we need to maintain are now at what we would call BAU, or their normal operating levels, and are not worsening. We expect to see some of that release as supply chain delivery times improve over time. Fortunately, the IMDEX business, none of our stock and none of our holdings are perishable or fashionable, sorry to say. But it does mean, that we do have capital deployed in that area that we're looking to get back as supply chains continue to improve. The labour side is a little more interesting, and whilst IMDEX is relatively labour light, unfortunately our industry can be quite labour heavy. And so we are expecting that labour challenges in North America and Australia will continue to remain a challenge for a while. So despite some of the macroeconomic uncertainty, you still have fairly low unemployment levels in North America and Australia in particular. So until you see that shift, you're still going to struggle to see labour move into the industry and stay in the industry. The flip side of that is you're starting to see some of the drilling companies upgrade their rig fleets to more modern fleets that require 2 FTEs rather than 3 FTEs. So there's a lot of activity going on to try and alleviate that pressure of labour in our industry. And again, I think you'll see that a feature of our industry for the next 1 to 2 years.
Great. Okay, so we've touched on what's happening on the ground at the moment, but why don't we shift the conversation into something a bit more big picture? In a recent presentation you gave, you highlighted that IMDEX's business model continues to shift. So just coming back to the earlier comments around market fears of a potential downturn, investors do like to go back and check the history books and see what happened last time, but it does sound like IMDEX is a very different business today and continues to evolve. So maybe you could provide some colour on that evolution of the business model.
Yeah, it's something we're very proud of. Our teams around the world have done a really great job at shifting our business model. Historically, we had a narrow range of fluids and a narrow range of tools that we would rent or sell to our customers. Today, that business model is a much more complex portfolio of sensing tools, software solutions to enhance those sensing tools, and a fluids portfolio that's complemented with rental products that help improve drilling performance in the market or in the field. And so that additional complexity means that we shift from a product by product by product type go-to-market model to a much more integrated solution model. That means that we're working closer with resource companies and drillers together rather than optimizing the solution for any given ore body. As a result, we're seeing that the number of IMDEX products that we're looking to deploy on any given site is greater today than it was at any time in its past. And there's 2 reasons for that. One is our R&D investment has been specifically focused at how can we build the next set of products that complement the existing set of products, and how can we provide better quality, better quantitative representation, and faster data back to our customers. And the key for us in that space has been our Hub IQ platform. So the ability to get any of the drilling data or any of the rock sensing data into our Hub platform so that whether you're a driller or a resource company, you can see that data anywhere in the world in near real time and make the next decision now. That's been a key feature. And so for us, I think if you go back 5 years, the percentage of our revenue that was connected through our Hub platform was 8%. Today, it's 32%, and it's a key metric inside of our business. It's a key metric for our clients who are looking to see greater utilization of the data that they originate being acted on in real time, because that ultimately makes a better business for them. So between that as our portfolio and how we work with our clients and the geographic shift, as we see a stronger activity in the Americas in particular, those 2 things are starting to shift the portfolio business pretty heavily. And Dom, that's before we start talking about our shift into the less cyclical production side.
Well, that's a good segue into my next question, Paul. We should probably finish up with the new BlastDog product, which does extend the exposure to the mining production phase. Please walk us through the product, what it does, why it's special, and help us understand the size of the prize.
Certainly. So I should point out, firstly, the extension from exploration and resource definition into production is a very logical strategy 101 play. So it's the same resource company, it's the same ore body, and it's ultimately the same rock measurement properties or the same drilling activities that you're trying to measure as we do in our existing business. So it is really, truly a fundamental relationship that we already have. It's a fundamental core capability that we already have. What we're working on is how do we take those technologies and change the workflow so that it's useful in production and give an answer that's useful in production. And so that's what we've been working on with our borehole stabilizer product for drilling optimization and our BlastDog product for rock knowledge sensing, and indeed our Mine Portal and Hub IQ products for the data capture and data analytics. Now, BlastDog in particular has been a 5-year journey of investment. It was a Horizon 3 project that has made its way all the way through to commercial prototype. And pleasingly, we saw our first contract up at Ironbridge announced when we did our first quarter results this year. So what that tool does is it's a multi-sensing logging tool that is important technically to capture a large amount of data altogether, but it's also important operationally to be able to survey not just every 10th blast hole, but every single blast hole, and not just look at the data later, but again, to provide that data in real time. And so that holistic product, everything from its robotic and automation capabilities to its real-time data capture capabilities, to the 3D visualization that you can do in My Portal, it's an end-to-end solution that we're very pleased to see getting its first run. On top of that commercial contract, we now have a number of trials in the pipeline lined up, 3 underway and 3 more planned. And we're looking to complete those in FY23 with a view to turning a couple of those into a commercial contract by the end of the year.
Great, thanks, Paul. And so we should probably let you get back to the day job now. Thanks for your time today. Always good to catch up and talk about your business. Take care.
Thanks, Dom. It's always a pleasure. Have a great day.